Hello everyone. A bank is a very important but highly misunderstood place. As an adult, you can't possibly avoid dealing with them, either through their branch, on phone, or increasingly online. Banks do it all, from parking your hard-earned savings, disbursing a loan to fund your education, help you buy a house, or maybe just to safekeep your precious jewelry. In spite of the central role in modern lives, it is bizarre how little we know about banks. Understanding their basic workings can go a long way in making sense of our economy and the financial system. The best starting point would be to understand how a bank makes its money. The bank's primary income comes from charging interest, which is a payment a person borrowing money has to pay in addition to returning the principal amount borrowed. The way a bank works in its most basic form is that it collects money from depositors and lends it to borrowers. Therefore, the bank has to pay some interest to the depositors and earn some interest off the borrowers. The example of the former is the interest a depositor receives on his savings account. From the perspective of the bank, this is an interest expense. Similarly, the interest earned by the bank off its borrowers is called the interest income. An example would be the interest, for instance, you pay on your home or car loan. The bank's primary income equals to the interest income it earns on loans minus the interest expense it pays on deposits and other sources of funding. We will come to the other sources of funding part shortly. It is obvious for the bank to make any money, the LHS of the equation, i.e. the interest income, has to be higher than the RHS of the equation, i.e. the interest expense. That is why the rate a bank charges on a loan is typically higher than the rate you can make on your savings account. Now remember, deposits aren't the only way the bank funds its loans. Debt from financial markets can also be taken. But in general, the interest expense on deposits is usually much less than what the bank has to pay on financial debt, thereby making deposit-funded loans more profitable. The bank also provides tons of additional services besides taking deposits and lending. For instance, selling insurance products, mutual funds, share trading services, and locker facilities, to name a few. They generally charge some sort of fee or commission in return, thereby creating a secondary source of income. Hence, to summarize, the bank has two sources of income. The primary source of income is the interest income minus the interest expense, and the secondary source of income is any fee or commission it earns on additional ancillary services. Hope you're able to understand how a bank works a bit better. Our next episode will explain the different types of banking institutions out there and the role played by each of them in our economy. Please comment and subscribe to Transfin for receiving rich, original news content from the world of business, finance, and our economy. Have a great day.